the market's confused, Steve strolls in with a chart and some probable news. Troy fires up Omega like, let's model this mess, while traders at home whisper, please help me stress test. It's the show where the candles dance, volatility takes its chance. Steve says rules, Troy says math, together they chart a hilarious path. Grab your lunch, don't be late, they'll tell you why the market's weird again. Oh, great. They're calling out levels, volatility rebels, equity drama, and index devils. One guy's calm, the other's pressing buttons fast. Is this bullish? Is this bearish? Ah, depends on the past. So tune in, laugh, and maybe learn to. These two make the chaos look almost doable for you. Every Tuesday at noon, hit that stream real quick, because markets are wild, and these two are slick.
What is up, everyone? Welcome to the Navigation Trading Show. We got a last minute call from our producers. They said they needed to do something to get our ratings up, and so we had to cut some of the dead weight. So Troy's out today and Matt is in.
Uh-oh, we're in trouble now. We're in trouble now. Steve, how are you, sir?
I'm good, man. How you doing?
Good. Just waiting for the weather to warm up. It's coming. It's coming. I'm looking out my window and I see sun. So this is good. This is good. Hopefully the market, let's see. I haven't looked in a minute.
It's been pretty choppy today. S&P is just above unchanged. NASDAQ just dipped back into the red. There was a little bit of a banking issue that came out where some of the, apparently the, what do you call them when they don't pay it back? The delinquencies.
Oh, yeah.
A bit of a surprise delinquency uptick. So,
yeah.
Not sure why that was a shock to the market. I mean, we've had ungodly amounts of debt for
a long time.
But for some reason, it decided to matter a little bit today. Schwab stock I saw was getting killed there for a while. I haven't looked at it.
Really?
Anyway, yeah, just kind of choppy overall in the markets, though.
Choppy. Yeah, you're right. Schwab is down 6% right now. Oh, and but back to flat on the year. So more chop. Pretty exciting. Steve, how do you deal with the chop?
Well, chop is good for selling premium. I haven't really, the only premium, 0 DTE premium I've sold today are my British Iron Condors, which are just kind of automated fire off tranches kind of all day long. I haven't done any of my Elmo trades. I took a few directional day trades this morning, and kind of like the price action shows, I got chopped up a little bit.
Yeah.
I took a long in Tesla. There was a small winner, ended up cutting, hit a first profit target, cut the rest for a small winner. I took one in, what were my other trades here? I took one in, give me 1 second. Took one in Netflix. That was a nice winner. Took some calls in Netflix, and that ran for a while. Hit a couple profit targets there. Kind of got pushed out of SMCI, and then I tried to re-enter Tesla, and so both those last two were a couple losses. So small red on the day, but I don't know, managed risk well. Just no follow through to the upside. I was kind of looking for that push above the previous day high in both the indices, and they both just kind of chopped around for a while, and now they're kind of rejecting back lower.
Yes. Yeah, it did kind of look like, I mean, listen, how many points are we up since Thursday open? I mean, what did we open at Thursday? I mean,
that was quite a short squeeze that we got Friday and then yesterday.
Yes. Quite enjoyable for people who had calls and long premium, I think. So
I did not take advantage on Friday like I had hoped I would have, because those are usually the days that I do really well on my directionals when you get an extended range like that. But I did not take advantage, and then I did yesterday though.
You didn't? Okay, so why didn't you take advantage on Friday? Was it not in your
Friday, I
plan or
kind of got, yeah, I trade off very specific levels to
Mhm.
manage risk around. And it was just one of those days where I kind of got pushed out right before the move happened.
I gotcha. Gotcha. Yeah, so kind of timing.
Yeah.
Okay. Well, I don't think we're going to have another 130 points today. We're currently up below 2 points. So
Looks that way. Looks like, sometimes the SP needs a little break,
I
It's
know.
worked hard the last couple days.
That's right. The last couple years, actually, maybe. So cool. Well, what do you have for us today, Steve?
Yeah, so I wanted to talk about a specific topic, and really this, it's a topic that I like to talk about because I think it's so important. But this really came up yesterday. One of our members, shout out to Articulate, um, wanted me to go over how I create a trade plan. And so I think that's what we'll do today is I want to share with the audience how I create a trade plan. And I want to be very, very direct when I say this though. This is how I create a trade plan, not how you should create a trade plan. So my goal here is to provide just my random thoughts about how I create my trade plans. And hopefully you can take a few things from it, leave out what you don't like, take what you like. And the thing about trade plans is it really is all about you. I mean, there's obviously in trading, there's all the psychology, the mindset piece of it, which is should be a big part of your trade plan. And then, kind of the actual financial and trading related details too. So I'll just kind of, I don't really have a very, step by step kind of anything like that I'm going to share. I'm just going to share my trade plan with the audience and give my thoughts around why I do what I do.
Love it. Love it. Are you ready now?
Yeah, so if you want to share my screen, there we go. So I actually, so the way that I structure this is every month, and I just use the calendar months. Every month I put out a spreadsheet and a video to my community of what my trade plan is for the following month. And I have two different ones. One is for my directional trading, and one is for more of my delta neutral, 0 DTE, 1 DTE type stuff in calendars. And I kind of put all that together, and then I keep my directional stuff separate. For my directional trading, I use a platform called TradeZella, which
Mhm.
is a journaling platform. It syncs all your trades into it. I have one account specifically that I do all my directional day trading in, and that's all I do in that account. And so I just have that synced up so that it automatically brings in my trades, and then has a lot of other features that you can use from creating a trade plan to taking notes, journaling, getting all kinds of statistics and details about your trades. And I only use this for my directional trades. And the reason being is I used to use a similar platform called TraderSync. But the problem is, with SPX and 0 DTE, I'm letting a lot of options expire. Sometimes I'm using the same strike multiple times. And these systems have a little bit of a difficult time grouping those trades correctly. So at one point, I was spending 90 minutes every single day after the market closed, just trying to reconcile my trades in a platform that was supposed to be making my trading more efficient, and it was just creating a ton of inefficiency. So I completely scrapped it, went back to a spreadsheet, and then later last year, I um, I decided I needed more details than my spreadsheet was sharing with me, specifically on my directional day trades. So I was looking at TraderSync, and then I found TradeZella, which I just like a little bit better. And so the only thing that I use this one for are my directional day trades because I never let those expire. I'm in and out obviously during the day. And so it's just gives me clean statistics and details about those trades. So what you're looking at here, this is TradeZella. And so for example, this is yesterday. And a couple things about what I do is I do a pre-market prep, And that really just involves going through some of the top stocks that I watch. I do this on SPY, QQQ, IWM, and Bitcoin. And then the kind of the main stocks that I watch for directional trading is Tesla, Nvidia, Meta, MSTR, PLTR, AMD, Hood, Amazon, AVGO, and usually a couple others that are in play. Maybe MU or some other chip name if it's moving, or we had a random crazy move in SNDK a couple weeks ago, so that ended up being in play. And so it's usually about 8 to 10 stocks pre-market. I'll go through and just kind of mark key levels. And when I say key levels, I'm just referring to points where price kind of pivoted and moved and turned in the past. And I use those levels as different levels to manage risk around, along with the previous day's high, low, and close.
Yep.
So I go through, so pre-market, I do those levels on the 4 indices and then these main stocks. And once you get used to it, I mean, it kind of seems like a lot, but once you get used to it, I'm literally done in, less than 10 minutes, because some of the levels are marked already from the previous day. And it's usually just changing a couple things and getting a good idea of what I'm looking for once the market opens. Because once the market opens, I need to be kind of laser focused. So all this is done pre-market. So that's kind of the technical side of it. And then the other piece here, scrolling back up to the top, this is something that I read through every single morning pre-market. And this is my trade plan for directional trading. And I start doing the directional trades right at the market open. So that's kind of the first thing I'm doing. So it's really important for me from a mental standpoint to have all this stuff kind of front of mind as I'm going into the trading day. So I'm going to go through a few things, and I'll just make some kind of side comments as I go through this. The first thing, as you can see, it says position sizing is the only thing that can create losses over many trade occurrences if I follow my plan. And so for me, that has always been the case, where if I get too cocky, if I get too thinking that everything I touch turns to gold, and then I up my position size, that's typically when something bad happens, right? So as long as I keep my position size in check, that's really the only thing that can pull me down for this type of trading. I make notes about, I think one of the things that you want to focus on in your trade plan is, what do you not do well? What can you do better? And what are your kind of Achilles heels? And one of mine is, and I say here, my biggest fault is letting losers get too big. And so I really need to have a daily focus on cutting losers quickly. And then I noted, sometimes I need to even dial into a 1-minute chart if I need more precise execution. So I'm typically trading off a 5-minute chart, but if I have been dialing into like a 1-minute chart to get more precise executions, both for the entry and the exits. But really the focus here is to make sure I'm cutting these losses quickly so they don't get too big. So that's kind of I just put that kind of front and center in a different color text, so it pops out at me, because that is something that I need to have on the front of my mind as I'm going into the trading day. Another thing, no trade entries after 10:30 a.m. Central. So I'm Central time, so that's 2 hours after the market opens. I had this as kind of a soft rule in the past, that I wanted to focus on trades just in the first couple hours. But this month I actually made it a hard, fast rule that I will not enter any day trades after 10:30 Central time after the first 2 hours. Because what I found in all my statistics, and I kind of knew this, but the statistics really, displayed it front and center. And that is, all of my profits were made with entries in the first couple hours. All the trades that I took after that ended up being around a scratch to a little bit red.
And how did you identify that?
What's that?
How did you identify that? Is that where the tracking? I'm just sorry to interrupt, but I'm interested in that part of you made this rule based on what observation? Like, how did you figure out that was going on?
Yeah, good question. So that's the other part of, having a platform like a TradeZilla or a Trader Sync is that I have all the statistics of all my trades, not just win rate, not just average winner versus average loser, but I can dial it into my entry times, every 5 minutes if I wanted to. So all that data is in TradeZilla. So I could literally, I went in and I filtered and I said, show me my P&L from 8:30 a.m. the opening bell to 10:30, and what was that? And then I started filtering in different 15-minute increments, and I came to the realization, oh my gosh, I'm spending hours. After the first 2 hours, a lot of times I'm spending hours just laser focused on the charts and trying to do some of these directional day trades, and I'm break even. Like
Yeah.
I'm using all this mental capital and I'm not
Yeah.
getting any profits from it.
That's
So,
yeah.
but to answer your question,
Yeah,
all
yeah.
those stats and details can be run in some of these reports that are available on TradeZilla.
Gotcha. Perfect. Thanks.
And then along those lines, I mentioned just to kind of reiterate to myself, a lot of these are just reminders to myself. After 2+ hours of being hyper focused on charts, that's when I start making mistakes. That's when I start forcing trades, breaking rules, changing size. Plus, I am wasting time and mental capital on lower probability trades. So just reiterating that to myself. The other thing, just kind of another little rule that I put in here is I must have a higher time frame thesis. So when I mark those charts pre-market, I'm doing that based on the daily and or the hourly chart. And so if there's no real thesis or kind of trend or higher time frame reason why I think, let's say I'm going to get long on Tesla. I got long Tesla today. The price action today on the shorter, like on a 5-minute chart, it really didn't look that great, but I was really using my bias from a higher time frame. So I gave it, so I entered based on that primarily. And I've found that when I have a higher time frame thesis, my trades get a lot higher probability as opposed to just dialing into like a shorter term 5-minute chart where there's so much noise.
I gotcha. Yeah, and Tesla liked what you said because it's it's a daily high now, ticking up on a big
I just
green
saw that.
candle, Steve.
Unfortunately, I'm out of it now.
I actually had a Tesla long trade as well that I'm also out of. So yes.
A couple other notes on Mondays. I always go half size, at least on my first trade. I've just found after a long weekend or just even a normal weekend, sometimes I have I'm a little too anxious to start trading again. It's kind of like, oh, it's Monday, got to get back to work, got to start trading. And what I've found is that sometimes I don't necessarily take the best trades. And so what I've done is I've simply just I feel like sometimes I just got to get back in the flow of the market. So on Mondays I go half size to start on my first trade. And then I'll even stay half size depending on the situation. Sometimes if I feel kind of good about what I'm seeing, then I'll size back up to normal. But just kind of a rule that I've started doing in the last few months where I'll go half size on Monday to start, especially after a 3-day holiday weekend. Swing trades, I'll kind of skip that for now because I'm not really doing much of that. And then this is kind of one of the main things that I want to emphasize. When you're creating a trade plan, you really, really, really want to emphasize what you can control and what you cannot control. And so for me, for this type of trading, what the only thing that I can control is my position size, when I get in the trade and when I get out, which is pretty much the same for all types of trading. But that's the only thing that I can control. I cannot control the amount of profit I get. I can't control market direction. I can't control the velocity of the move. I can't control news. If something random, Trump tweets or, whatever comes out while I'm in a trade, I can't control any of that. And so there's zero reason for me to focus on that. I'm really just trying to focus on the 3 things that I can control. Then I have to remind myself, I don't know if you knew this, Matt, but I am not a psychic and I'm not a fortune teller.
I know it now that you told me, Steve.
Sometimes I think I am, but so I have to remind myself on a daily basis, I am not a psychic and I am not a fortune teller. I don't know where or when the market will
Yeah.
move. My only job is to enter at a predefined level, allocate my predetermined amount of risk, and exit if my level does not hold. That's the only thing that I should be focused on. And then position size, right? This is one that everybody knows they need to focus on. Sometimes they do, sometimes they don't. But position size is something that you've got to really dial in. And even as recent as last year, when I had some pretty crazy months on some of these directional day trades when the whole Trump tariff thing was going on, and I had one month that was over six figures in profit. I had one that was pretty close to six figures.
Yeah.
And when something like that happens, and I was ready, like I was ready for when Trump came into office and the tariff stuff started. I knew there was going to be volatility, so I was ready, and I did a good job around that. The problem is what happened after that. I got way too loose with my rules because I had made so much that I could feel myself starting to get in a position. And I had days where I gave a bunch back, um, but I was able to kind of rein myself in and get back to where I needed. And in fact, what I did is I simply just wired a bunch of money out of my accounts and
Mhm.
dialed back my position size after a lot of that volatility started to kind of slow down.
Yes. Yeah. So you recalibrated basically for a crazy event.
Right. Exactly. And so and then what I found myself doing is I found myself going in, for several weeks after that. Even I found myself going into the day not really having an idea in mind of what position size I was going to use. I would just, in my mind at the time, just looking back in hindsight, looking at how I was thinking about it, I was kind of doing it from a standpoint of I want to size up when the opportunity is there and dial it back if it's not there. The problem is I didn't do that. The problem is I would, price would just be chopping around, and for some reason I might think I needed to size up. Maybe it was because I took a loss earlier that day and I was trying to get it back. All those different mind games that we play with ourselves. And I would find myself getting in with significant size during periods where it wasn't warranted. And so that's when I really realized, okay, you need to you need to really dial it back.
Yeah.
And so now what I do is I have a very strict position size that I use, and I I dial that in at the beginning of the month. So that's the position size that I have to use for the entire month, regardless of what's going on. Um, I really think there's a big benefit for this type of trading to use what's called dynamic position sizing, which is kind of what I just mentioned, where you're scaling up to a bigger size when the opportunity presents itself and you're dialing it way back when it's maybe not as great of an opportunity, but you still want to be active.
Yeah.
The problem is I haven't I don't trust myself enough yet. And so what I'm still doing at this point is in fact, in the last couple months, I've really dialed back my position size, and to build a really solid discipline and kind of restraint around my position size,
Mhm.
because my ultimate goal is I want to be able to scale my directional day trading to where I'm booking consistently seven figures a year. That's my
Okay.
goal.
Okay.
And the way that I was doing it before, of going big here if I felt like it that day and do all these different things that I was doing, is not scalable. I did well for a period of doing that, but I could feel myself getting out of control, and I knew I had to dial it back. So, you know, it's which is kind of tough. I mean, it is for me anyway. For somebody who's been trading as long as I have, it's kind of hard on the old ego to do what I've done and
Yeah.
dial it back to such a
Yeah.
smaller position size. But I really think, and I can already feel it working, is that if I can dial it back and I can really build those disciplines at this level, it's going to be really not easy, but it's going to be achievable to scale this and, just add another zero, add another 10%, 50%, double my size, those kind of things going forward. But if I can't build that discipline at this level, then
Yeah.
I won't be able to do it at a bigger level.
I just think that's super important because Steve, I've been doing this for about 6 years. You've been trading for how long?
Since I started trading futures in 1999.
So I mean, you have a you have more experience than 99.99% of the population, 99.9999% of the population. And you're still recognizing um your own like kind of emotional framework that you're dealing with as you set this up. Like I just think it's super interesting because most people aren't successful at trading. Somebody who can have positive years for 5 years or 25 years or however long is extremely rare. And I think people skip over the part that you mentioned, which is the mental discipline is it's extremely challenging.
Well, just to be clear, I was not consistently profitable for my first 10 years. So, you hear people like, oh, it took me 3 years. It took me 5 years. It took me 10 years, Matt.
But that was you stayed on the horse, you paid the market tuition, and now, I mean, the last 10 years look very different than your first 10 years, I would wager.
Right.
Yeah. So it's super helpful because the other thing is, I think with the rise of automation, a lot of folks can automate options trades, stock trades, futures trades, whatever. Like this part of the process, I'm interested in your take. Do you think this part of the process has been kind of glossed over? Because with the ease of automation, we try to make our platform, it's just a couple of clicks, but it's automation. It's not auto magic. Like it will do what you tell it to. So if you don't have the framework well thought out of what you're telling it to do, are you setting yourself up for success or not? And you
Yeah.
just
I definitely think, because this trade plan that I'm talking about here, this is all manual. This is all directional. This is a totally different ball game. And that's why I have a totally separate plan for all of that stuff
yeah
that I can touch on as well. But yeah, it's a little bit different it's a little bit different mental framework. I mean,
yes
when you have automation bots and systems going, it's more of a mental framework around managing your systems, right? Don't
Mm,
interject with what the bot's doing.
right.
The whole trust the back test type scenario, if that's the way you do it. So yeah, it's a little bit different framework, but I think a lot of kind of what I'm going through here can be related to any type of trading.
Yeah, because people it's a different thing, but you're doing um directional trading, but you're still have rules in place. And you took the time to think through the rules. And like I deal with people all the time who they'll have a question about an automation or back test, and it's like, did you fiddle with your test? And it's like, well, yeah, I made 3 different adjustments. Were those in your back test? No. Well, why'd you do that? Like they didn't take the time to think through, why am I making this decision? What are the rules around it? Does this even make sense to do?
Yeah. Yeah. And I see people in my community and, just all over the place, social media, where, they have zero kind of written plan. Right.
Right.
And that's just, whatever the statistics are you hear thrown around, like 90% of traders fail.
Yeah,
Well, you know what? 90% of traders don't have a written trade plan either.
that's
Do you
right.
think there's any correlation with that?
That's
You
right.
know?
Hopefully they find this and watch this on the YouTubes.
Yeah. So, I mean, it really is a minimum to be a successful trader. In the markets, I mean, you're dealing with the smartest people in the world. You're dealing with the smartest computers in the world. And for you to think that you can come in and have no plan and just like copy somebody else's trades or wing it and say, oh, I'm going to do this today and that, like, you have no chance. You have zero chance to make it. And there's such a low barrier to entry in trading. You throw some money in an account, you click the mouse a couple times.
Yep.
Oh, and then you make a winning trade, which a monkey could do. And so you think you're a trader, or you say you're a trader. There's no way you're going to be successful if you don't put in the effort and have a framework to work around like this. I mean, having a trade plan is the bare minimum to having success in the markets, in my opinion.
Yep. Yep. Yeah, that I think you just made a great point, which is the most advanced models, the smartest people, and the most well-funded companies in the world function as brokers and market makers and financial participants. And at the same time, retail has more opportunity than they've ever had. But if you expect to go in without a plan, what's the expression about failing to plan and planning to fail? It's like it's also never been easier for retail to come up with a good game plan than it is right now because of the tools that are available to normal people. When you read trading books 20 years ago and they're talking about like watching your commissions because commissions are making the difference between you winning and losing, and you realize these people are paying $20 for an over the phone order. And now it's like you've commission free stock trading, commission free option trading, 15 cents for fees. There's a lot of opportunity out there, but people have to do the work.
Yeah, the playing field has definitely been leveled with technology, and in fact, from some standpoints, the retail has the advantage. Like, if I'm a fund, if I'm a $1 billion fund, and I have to
Yep.
move $100 million positions, I can't just click
That's right.
confirm and send, right?
That's right.
As a retail trader, you're much more nimble. Now there are some other, disadvantages. If you're a market maker, you get to use the bid and ask, you get the spread, all those things. But from a pure, just, retail versus institutional making trades, I would argue that the retail has some advantages there.
Yes.
But if you go in winging it, you're dead. You're dead.
That's right. Right.
Yeah.
Perfect. Well, this was great. Steve, do you have anything else you want to share on this?
There's just a few other things. So position size, obviously, I have a max risk per trade. I have a max number of trades that I do, max time in trades, just some other notes. It really just comes down to I just continue to make notes here on things that I need to bring front and center pre-market. And then the only thing I'll say on the other stuff is like I said, I have a separate trade plan for my kind of automated and 0 DTE and calendars and stuff like that. And I just put that in a spreadsheet. And again, I kind of tweak this and share it with the community every month. But, I have my 1 DTE iron condors where I always have my option Omega backtest links, my 6, 7, and 3, 4 put calendars, my British iron condors, my Elmos. I do a totally different one on my directional trades, but I just still have that on here. My Magic Mahomes, my FOMC trades. So I have everything laid out of, exactly what I'm trading that month. And it really helps you from doing something stupid that you weren't planning on if you have a plan. And the other thing is you have to commit to it, right? In the past, there have been times where I had this written plan, but I would just kind of sometimes follow it, sometimes not. And I think what's really helped me, and I started doing this, I think I have all my trade plans here going back to, August of 2023.
Pretty good.
Where I started trading them, sharing them with the community. But what really helped me was I shared it so now I'm being held accountable by my own community. So that helps me. But B, I commit to it 1 month at a time.
Mm-hmm.
And so it's kind of like, okay, I can make any change I want to my strategies and what I'm doing, but I have to wait till the end of the month. And for me, that's been a big deal because it's created this situation where I can't veer off in mid-month or midweek. If I see something that I think is a better idea, I can do that and I'll make notes about that, but I won't change it till next month,
Yep.
till the end of
Yeah.
the month.
Like it's almost like that you give the feedback loop a big enough time to outlast the emotion of like
Yep.
whatever emotion. And listen, the emotions are tough. I told this on the OO show the other day. I had a trade that I'm on the fence about taking out, and I have the same thing as you. Like I do those on a monthly basis. I do a portfolio review on a monthly basis, and the trade was up a lot in an unreasonable amount of time, and I lost a lot in a row. And I was like, man, I just want to take it off, can it, and shut it off. But it was like the 6th of the, I'm in the month. Of course, I let it ride and it hit near max winner. And the struggle is it's like, oh, I did the right thing. It hit a max winner, but really the right thing was just letting it ride out. And then at the end of the month, need to hold back a couple more weeks. At the end of the month, look at it and say, do I still want to take it off or do I want to keep riding with it or not? The time to do that is not in the middle of the trade.
Right.
So, but listen, we had some comments. People appreciate the discussion. So thank you, chat. Appreciate it. Let me just give a plug here too. I think the other thing is super important. I did not have this when I started trading, and I was lucky because I started in 2020, which was actually like the best time to start trading. And I got super lucky with just incredible movement in the market, which is great if you're doing long options, which is what I was doing.
Calendar printed.
Oh my gosh. Oh my gosh. I didn't even know what a calendar trade was in 2020, but I bought a bunch of leaps like a week from the bottom. And I had no idea that markets don't normally go up and that leaps don't just double every day. Like I didn't know that wasn't a thing, but I didn't have a community. And so if you are looking for a trading community, Steve runs his day job is Navigation Trading. And you can check them out. They are a fantastic community. It's super active. Bunch of different perspectives, people from all over, a lot of different ideas. It is a great place. So if you are somebody who's watching this and you need a trading community, Navigation Trading is a real one. So I would recommend checking.
I appreciate you saying that, Matt.
So, yeah. So one more, do you have time for one question before we wrap up here? Somebody asked, what does getting in the flow of the market mean? How can you do that if you don't know what the market's going to do? That is a great question. And I think they were talking.
That is a good question. So I think he's asking that from when I said on Mondays, I start with half position size because I'm trying to get a better feel for the market and get in the flow. Really what I'm saying with that is, I haven't traded for a couple days, because it's been the weekend. So and the other thing that backs this up is the statistics. I went, that's the other thing. The reason I did that rule is because I went through all the statistics of my trades and I realized my first trades on Monday were some of my worst trades. And so it's just like, it's a new week. You got funds repositioning, you got traders coming in, to start the week to do different things. And then for me, it's almost like I'm out of practice because I've taken a couple days off. And so it's really just about me kind of feeling out the market. Does it look like it's going to be a choppy day? Does it look like it's going to be a trend up day? Does it look like it's going to be a trend down day? So it's really just about kind of watching the different stocks, being a little bit more patient, watching the indices, seeing how, different stocks are reacting versus the indices. Where's the relative strength? Is it in chip stocks? Is it in cryptos? It is, what's going on? So that's what I mean by trying to get in the flow, is just kind of trying to get a feel for what the market is doing that day.
Yeah, that was a great question. Hopefully that answers the question. But yeah, Steve, that was great. This is fantastic because this is a timeless, this is kind of a timeless bit of wisdom here, and hopefully people will find this and come back to it when they're building their trade plans. So
yeah, I love this topic, and like I said, it kind of came up because we had one of our members in our community just mentioned, "Hey, how do you come up with a trade plan?" And I was just like, you know what, that's a great topic for our show tomorrow. So if you guys have any topics that that you think would be helpful to cover for future shows, feel free to drop those in the comments as well.
Yep.
And
Perfect.
we'll make it happen.
Awesome. Thanks. Well, appreciate it as always. If you guys want to check out Steve, he's at